July 3, 2025. A seemingly ordinary date, but one that would mark a significant turning point in the world of Indian finance. A seismic shift in Indian banking. A tremor that sent ripples throughout the entire financial ecosystem. State Bank of India, the nation's largest lender, a financial institution with deep roots in the country's economic history, has officially declared Reliance Communications' loan account as fraud. A definitive statement carrying immense weight and signaling potential legal and financial repercussions. This move directly implicates Anil Ambani, the face of Reliance Communications and a prominent figure in Indian business circles. The company's former director. His leadership, once celebrated, now under intense scrutiny. SBI's decision follows a lengthy investigation, a meticulous and thorough examination of the financial dealings into RCom's use of borrowed funds. Where did the money go, and was it used as intended? These were the questions at the heart of the investigation. Months of scrutiny revealed major concerns, red flags that could no longer be ignored, about the management of a massive loan. A loan of such magnitude that its mismanagement could have far-reaching consequences. The fraud label, under Reserve Bank of India rules, a designation not taken lightly by the regulatory body, signals serious violations in handling the loan. Violations that could lead to significant penalties and legal action. This isn't just a business headline. It's a story that transcends the financial pages. It's a blow to a once dominant telecom giant. A company that once stood at the forefront of India's telecommunications revolution. And a high-profile businessman. A figure who has long been synonymous with ambition and success. RCom, already in insolvency, struggling to stay afloat amidst a sea of debt. Now faces even greater challenges. The road ahead looks even more treacherous. SBI's action also singles out Ambani personally, placing him directly in the crosshairs, escalating the stakes. The pressure is mounting, and the consequences could be severe. The story is complex, involving legal notices, a tangled web of legal proceedings, failed explanations, and huge sums of money. Billions of rupees are at the center of this controversy. It's a sign that Indian banks are cracking down, taking a firmer stance against financial irregularities, on suspected financial misconduct, no longer willing to tolerate questionable practices. Understanding how this unfolded is crucial to grasp the full implications of this event. For anyone following Indian business, this case serves as a cautionary tale for the entire corporate world. We'll break down the key events, dissecting the timeline to understand the sequence of actions, the rules at play, and what this means for all involved. Examining the regulatory framework that governs these transactions. This is more than a corporate crisis. It's a potential watershed moment for the Indian economy. It's a turning point for accountability in Indian finance, a renewed focus on transparency and ethical conduct. Let's dive into how we got here, tracing the steps that led to this critical juncture. And what's next for RCom and Anil Ambani? What does the future hold for these key players? The fallout from this decision, the repercussions that will be felt across various sectors, will echo across India's business landscape, a landscape that is constantly evolving and adapting to new challenges. When a bank brands a loan account as fraud, it's a significant and serious action, not taken lightly. This label carries immense weight and has far-reaching implications for everyone involved. It's not just about unpaid debt, it goes much deeper than simply failing to meet repayment schedules or encountering financial difficulties. It's about suspected deception, a deliberate act to mislead the bank. Under RBI rules, this means the borrower may have misused funds, diverting the loan for purposes other than what was originally agreed upon, lied to get the loan, providing false information, or concealing crucial details during the application process, or caused intentional losses, deliberately engaging in activities that led to the financial downfall of the business, impacting the bank's investment. The consequences are severe, a harsh reality for those found guilty of fraudulent activities. A 5-year ban from new loans or credit, effectively cutting off access to vital financial resources. This ban cripples business prospects, making it nearly impossible to secure funding for growth or even day-to-day operations. The fraud tag also triggers law enforcement investigations, bringing unwanted scrutiny and potential legal battles. This opens the door to criminal charges, with the possibility of prosecution and imprisonment. For companies and individuals, it's a reputational disaster, a stain that's hard to remove. Consequently, no bank will touch them, making it difficult to conduct even the simplest financial transactions. This isn't a step banks take lightly. It's a decision made with utmost care and consideration. It follows a detailed probe and strong evidence, ensuring that the accusation is well-founded and justified. For RCom and Anil Ambani, this situation presents a unique set of challenges. This is more than a financial setback. It's a critical juncture that could determine the future of the company and its leadership. It's a legal and public relations crisis, demanding immediate and strategic action to mitigate the damage. The label signals to the entire financial system, a warning sign that cannot be ignored. This borrower can't be trusted, making future financial dealings highly improbable. The fallout can include court cases, hefty fines, and even the possibility of jail time, depending on the severity of the fraud. In short, a fraud declaration is a financial death sentence, a devastating blow that can lead to complete ruin. SBI's fraud declaration was the result of a year-long step-by-step process. It began when the bank's internal teams flagged serious irregularities in RCom's loan usage. The first move, a show cause notice to RCom and Anil Ambani in December 2023, demanding explanations. RCom's responses failed to satisfy the bank. A second notice followed in March 2024, signaling unresolved concerns. Even after multiple replies, SBI found the explanations lacking. By September 2024, a final notice made it clear. The bank and company were at an impasse. With no convincing answers, the case escalated to SBI's internal fraud committee. This committee reviewed all evidence and recommended the fraud label. The process was thorough, giving RCom several chances to defend itself. Ultimately, the bank concluded that the breaches were too serious to ignore. The timeline reveals persistent efforts by SBI to resolve concerns with RCom. December 2023. First show cause notice. RCom's reply fails to clear doubts. March 2024. Second notice. SBI's questions get more pointed, but answers remain unsatisfactory. September 2024. Third and final notice, still no resolution. Over 9 months, SBI documented every step, building a case. The repeated notices show the bank's patience and the seriousness of the issues. After the third failed attempt, the matter went to SBI's Fraud Identification Committee. The committee reviewed all evidence, including RCom's replies. Their verdict: the loan account met the criteria for fraud under RBI rules. June 2025. SBI sends the official letter finalizing the decision. This wasn't a hasty move, it was the result of a methodical, well-documented process. The pattern warnings, unsatisfactory replies, and finally, decisive action. The stakes. Over Rs 500 crore in loans to RCom and its subsidiaries. This wasn't a minor case. Banks were alarmed by the sheer scale. SBI's forensic audit uncovered major deviations. Funds weren't used as agreed. Money meant for telecom expansion was diverted elsewhere, violating loan terms. The audit traced questionable transactions that couldn't be justified as normal business. Despite multiple chances, RCom and Ambani failed to explain these discrepancies. The committee's detailed report laid out the breaches, prompting the fraud declaration. With so much at risk, SBI had little choice but to act decisively. Anil Ambani's legal team is fighting back, calling SBI's process unfair. They claim the bank ignored their communications and denied Ambani a personal hearing. According to them, this violates basic legal principles. Everyone deserves a chance to be heard. Ambani's lawyers also argue he was only a non-executive director, not involved in daily operations. They say holding him personally responsible is unjustified. The defense is preparing to challenge the fraud label in court, citing procedural flaws and lack of direct evidence. The legal battle will focus on whether SBI followed due process and if Ambani can be held personally liable. The outcome could set a precedent for future cases involving company directors. RCom's defense hinges on insolvency law. The company is under the Corporate Insolvency Resolution Process, CIRP, which shields it from past liabilities once a resolution plan is approved. Section 32A of the Insolvency and Bankruptcy Code offers this legal protection. RCom argues that SBI's fraud declaration should be handled within the insolvency process, not separately. If the National Company Law Tribunal approves the plan, new owners are protected from prosecution for past offences. However, this shield doesn't extend to former directors like Anil Ambani. The courts must now decide whether banking regulations or insolvency law take precedence. The outcome will clarify how much protection insolvency offers in fraud cases. SBI isn't the first bank to flag RCom's account as fraudulent. In late 2024, Canara Bank tried the same, but the courts halted it over procedural lapses. The pattern: multiple banks, similar concerns, and a history of regulatory scrutiny. The Bombay High Court's stay on Canara Bank's action highlights the importance of due process, a key point in Ambani's defense. Multiple fraud allegations suggest deep-rooted issues, not just a single bank's complaint. Ambani is already banned from the securities market for unrelated fund diversion. The mounting regulatory actions paint a challenging picture for his business future. This isn't an isolated incident. It's part of a broader pattern of financial trouble. For Anil Ambani, this ruling carries significant weight. The fraud label, a severe indictment, means a 5-year ban from accessing credit facilities. This restriction severely limits his ability to raise capital and engage in future ventures. Beyond the credit ban, there's a near-total freeze on his involvement in business activity. This effectively sidelines him from any significant decision-making role within his existing companies. Combined with the existing SEBI ban, which already restricts his involvement in the securities market, his corporate career faces unprecedented hurdles, potentially marking a turning point in his professional trajectory. The challenges are mounting, and the road ahead appears fraught with difficulty. RCom's fate now precariously depends on the ongoing insolvency process and the NCLT's final approval. The outcome of these proceedings will determine the future of the company and its stakeholders. Even with legal protection sought through the insolvency process, the fraud tag could haunt the company's reputation for years to come, impacting its ability to attract investors and partners. This case serves as a stark wake-up call for Indian business, highlighting the increased scrutiny and accountability that companies and their leaders now face. Banks are demonstrably getting tougher on big loan defaults, signaling a shift in their approach to risk management and lending practices. The era of easy credit for powerful promoters, where connections and influence often outweighed financial prudence, is definitively ending. SBI's decisive action may very well inspire other banks to pursue similar cases against defaulting borrowers, thereby raising the bar for corporate governance and ethical business conduct across the board. The legal battles ahead, undoubtedly complex and protracted, will set crucial precedents for accountability and transparency in the Indian corporate landscape. The RCom saga is now firmly etched as a landmark case in India's financial history, a cautionary tale for businesses and lenders alike. It is fundamentally reshaping expectations for transparency, ethical conduct, and responsibility within the Indian business ecosystem. The message is unequivocally clear. In today's India, even the biggest names and most influential figures are not above the rules and regulations.